Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Ahead of the US CPI data, weakness in commodities, especially Brent, have been making the rounds in the market, especially with its fall as global demand continues to struggle, coming from large consumer countries like China, which is facing strong deflationary pressures. Apart from markets, US presidential debate was held today morning as per the Indian time. This is significant as the presidential race gets closer. Good morning, GK. What's your thought on the developments overnight and any take on the debate?
Hey, good morning, Suraj. Yes, markets has suddenly a lot to chew, uh, in terms of how the policies are going to be and what direction the currencies and stock markets will take. Definitely, there were a lot of focus on today's presidential debate between Harris and Trump. It appears that there was no clear winner, but Kamala seemed to have had uh, adequate performance and possibly seen as a winner from tonight's debate, although the our final outcome on who is going to lead is still quite a close call. That is how the analysts are talking about, because Trump, though he was the main character who was being watched, whether he would outperform like last time, he did not effectively use the spotlight to give undecided voters a new reason to give him another chance. So I think it is still up in the air whether who is going to lead. Uh, there are also doubts whether we will have another debate, but possibly we'll get more political analysis in the coming days and more speeches from these candidates, which will give a better idea of who is going to lead. In the meantime, we did not have much data yesterday. One significant data was from UK, which was on the employment side, and employment side was again stronger on the UK side, which supported the pound to an extent. But although we did see the dollar strength taking over eventually. Meantime, Bank of Japan has made some statements. In fact, Mr. Nakagawa of Bank of Japan has said that if inflation keeps rising above the BOJ's outlook, they will be raising the rates, and they will adjust the degree of monetary policy, which means QE also can be adjusted lower. So that has given a boost to yen, but boost to yen does not necessarily mean overall dollar keeps falling, because you have the yen crosses which are being sold quite heavily. We all know that yen has been sold against these currencies over the last few years in carry trade, and that is slowly seeing a second phase of unwind, because we are almost certain that Fed will be cutting rates at least twice this year, if not three, starting on September 18. At the same time, Bank of Japan is almost certain to raise the rates, if not this month. The next meeting, they will be raising the rates. So the differential, and you know that ECB is also going to cut when they meet next on Thursday. Bank of England, there's still a question mark. Bank of Canada is going to cut again. So we have whole host of central banks who are cutting rates, while BOJ is hiking the rate, and the differential between yen and other currencies are narrowing. That's leading to yen really strengthening against most other currencies. And when yen strengthens, the carry trades are threatened, and that's why you see that the stock markets are not really able to maintain their uptrend that was seen till last month. So we have this currency where dollar index actually rose a bit yesterday, but not significantly, mainly with the euro falling. to again the support zone of 1.102040, but not really able to break it. And yen outperforming other currencies. Gold also stayed quite bid, because now it is very clear that US disinflation will continue, irrespective of how the numbers look today. Year on year, of course, today is expected to be lower. Other numbers are expected to be unchanged. But looking at the commodities, the way the commodities have been crashing, particularly the oil, which is now at 33-month low of 69.5, the Brent oil, and other commodities not really rising. That gives a sense that economies are really slowing. And one definite confirmation is the Chinese economy is slowing, as depicted in their inflation numbers recently, which came low, and also very, very low import demand from China for commodities. So these are actually giving a sense of slow growth continuing and impacting the commodities, and in turn possibly leading to overall global demand also coming down. The currencies seen divergent performance from measures, yen strengthening and others weakening. And in fact, we are seeing even the Chinese yuan weakening afresh after seeing 7.08 in the last few weeks. And then now it is at between 7.12 and 7.13. So that's a significant move. And even the fixing from China has been on the higher side for the dollar. Now, on the rupee side, we know that the spot has remained almost stagnant, but two things are moving significantly in the Indian forex market. Forward premiums are now trading at 17-month high of 1.84 rupees for 1 year, or 2.2%. We had seen a low of 1.55% for the 1 year premium. And this is a substantial move happening chiefly on account of US yields moving lower, and that of Indian remaining elevated, with spot and the premium both at new highs. It has indeed been very attractive for exporters to hedge, although in view of the uptrend in the spot being maintained, we are not seeing any significant action from the exporters so far. The other, segment of the Indian forex market is the option volatilities, which is indicative of the cost an option buyer is ready to pay to buy protection for through a put or a call, has slumped to the lows last seen in October 2005. And that was, that is now currently trading at 2.39%. The historical low was 1.5% seen in July 2004. This is for a 6-month call option. And when historically, when we saw such lows, we saw with the time lag a huge volatility erupting in the spot INR, and it can be either side, of course, depending on why it moves so much is because at some level of option premium, when it becomes too cheap to protect yourself, you will see huge amounts of corporate demand for hedging through options, and that can translate into a spot moment. And of course, with the two conditions, like dollar moving along with the flows, global dollar, I mean, then RBI also might be inclined to let the rupee move in line with the fundamentals. So that is something that is likely in the coming months, but we are probably not yet there. But this is the area which I'll continue to watch as far as the option walls are concerned. Otherwise, spot USDINR remains almost stagnant between 83.95 and 83.97. Thank you.
Thank you, JK. And it seems not much of data yesterday night, except for the presidential debate between Harris and Trump, that did not seem to have a clear winner. And of course, some BOJ member statements on possible rate hikes if inflation keeps trending higher. This was supportive of the yen, which strengthened as the interest rate differential between Japan and other major economies continue to narrow, as Japan is on the path of rising rates and other major economies are on the path of cutting. Brent oil is at a 33-month low, and there's a definite slowdown in the global economy. For rupee, some things to notice, of course, the forward premium, which has been rising as US yields move lower due to the rate cuts being priced in. But that's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.